talking about a whole bunch of different things. For one, this week has had a massive tech sell-off in the public markets. It's been brutal for some of my personal tech holdings in my portfolio, and I was overextended, I think, in my options trading strategy related to what I was trading in the tech space. So everything else in my portfolio, way up, doing very well. My dividend stocks, in Canada here, doing extremely well. But I want to talk a little bit today about what's going on in the real estate market, specifically in southwestern Ontario, and how inflation is playing into both public equity, overinflation pieces, and in some areas, I think assets are actually at a discount right now. And then as well, talking about some of the real estate pieces and how that fits together. So if you guys have any questions, just shoot them down below and we'll have an active chat. And yeah, Mike, how you doing? Brian says first. It looks like you missed out, Brian. Sharon says, hey, Mike, thanks for sharing your knowledge. I really appreciate it. Hey, no problem. Happy to be here. Happy to share what I know. And I'm feeling blessed. Actually, I just counting my blessings on days like today. It's good to stay very positive on days like today when you have a heavy options trading tech portfolio, because I got destroyed today. I'm heavily invested in some of the leading edge tech companies, some of the leading edge crypto plays, and that got destroyed today. Some big names that got beat up 15-16% in the market here. So there's definitely some opportunity to have doubled down today. I think that Riot, Mara, Can, a couple of other ones that I follow, all were at huge discounts today, I think. So I actually doubled down on some of the positions. But again, my portfolio today took a $50,000 hit. On Monday, I took a $35,000 hit. Tuesday was a big recovery day. I made back all my Monday losses, but I'm still net down today because of what happened, right? So it's been a brutal week for my options trading portfolio. Again, you don't lose until you sell. And I'm holding. I got that HODL mentality. The companies I'm investing in, I believe in long term. And I got a list of about 90 companies that I really liked. I really do like still currently. So there's about 120 companies that I'm investing in, and 90 of them I'm trading options on right now. So yeah, there's definitely some interesting plays, and I think the market. We're going to talk about some of the inflation pieces. If you've been watching the monthly numbers that have come out, all of the money printing by the Fed in the US and in Canada as well, the M2 money supply is just, on a straight climb. We're printing more than we've ever printed before. And that does boost the economy in conjunction with a lot of the recovery that we've actually seen. There has been some real recovery, especially for those in the top quarter. The top quarter of people went through COVID's, pandemic type of, went through that unscathed for the most part. In fact, savings rates for the top half are at all-time highs, 3, 4, 5 times higher than they were in previous years. So people are saving more. They're dumping it into the stock market. They're dumping it into real estate. People who own real estate have experienced huge appreciation levels. In the US, I think we'll see by year end 25% across the board increase in the price of houses. Certain segments maybe less so, certain populations less so. And then I think that it's interesting to also look at, and I'll answer your question in a sec there, Kyle, it's a good one. I also think it's interesting to look at how that's played out in southwestern Ontario and the pressures we've seen here from a supply side. We've seen so little supply. There's just not a lot of new housing starts. We're way behind. People can't complete their construction on the units that they're working on. So what that results in is a lack of supply. And this lack of supply combined with really cheap debt and a whole bunch of money pumped into the businesses and into the hands of people, which eventually trickles up to the top half, which own most of the real estate, that ends up creating basically a little bit of a bubble. Now, is it a bubble that's at its peak? I don't know. We've had here in London, Ontario in the last 12 months, 42% appreciation. So over 40% appreciation in 1 year. That means if you owned a house that was, $1 million house, it's 1.4 now. If you owned a $100,000 house, 140,000 without doing anything. You own a $500,000 house, the math on that's a $700,000 house now, right? So there's just huge lifts in a 12-month period on all the real estate. And so, in hindsight, I'm like, oh, darn, I sold a lot of my portfolio off. That sucks. On the other side, hey, I still have a good sizable portfolio. I have like over 20 properties. And so I've made 7-figure gains in appreciation, super blessed. But then the question with people like me who have made all this appreciation, we're thinking, what do we do with all this capital? Well, most of us are going out in this cheap debt, and so we're refinancing our properties. We're pulling that money out. Now we have an excess of capital. What do? We buy businesses, we buy public equities, which stocks, and we buy more real estate. In my case, I'm not buying a lot of real estate unless it's off market undervalue. And so I am still buying. We've locked up 3 properties in Sarnia. My brother and I, stepbrother and I are going hard there in Sarnia. We got 3 deals, so that's exciting. Picked up a 6-plex. But other than that, there hasn't been a whole lot that I've seen that's made a lot of sense on the acquisition side for real estate. And my stock market portfolio is bigger than it's ever been. I have a huge stock portfolio. I would say almost half. Yeah, about half my net worth is in public equities right now. So I'm along for the ride. The S&P 500 has just been doing fantastic. I've been riding along. I am optimistically cautious, I guess is the word that I would use to describe how I feel about things. I think that with all of the printing of the money and all of the free flow of cash, discount rates for future growth, I mean, I'll put it this way, I don't know that some of the growth stocks are overvalued, but I think that they're assuming that the companies will grow faster than they actually can. Most of the time, people think they can do more than they can in a shorter period of time, and then over a long period of time, you'd be surprised what people can do. So I think 10 years from now, we'll see names like Tesla or Neo or some of the other like Open or even Oracle and Microsoft and Amazon. A lot of those giants are going to go a lot further and gobble up more market share in the coming years, I think, than we might expect. But in the short term, they're not going to do near as much as what people think. And so there will be corrections, which are opportunities to buy, right? But we buy when things are dipping. We buy the red. So all I do is buy the red and sell the green. Someone asked a question here on the chat a minute ago. Kyle said, Mike, do you ever find it overwhelming to have 120 positions and trading on 90 of them? So I don't, I'm actively trading, but I'm not heavy in any, I make that mistake sometimes, but I try not to get too heavy in any one position. And so I think it's important to, I think that the biggest piece is to have your eggs all spread out in many different baskets, right? So if you can protect your downside by being in a bunch of different sectors and companies, that's the safest place you can be. So when I log in the morning, some of the things I do when I open my phone at 9:30 when the bell rings, I'll look and see, if there's any positions that have had a huge spike. Did something happen where there's, a news event that they're up 20, 30%? I'll harvest almost all of my original cost base and just leave the profit in to ride on most of my put positions. If there's an opportunity where I've got a bull split, sometimes on GME, I've been playing around. This is gambling, by the way, because I don't have long-term faith in GameStop, but I think that other people do. And I believe in the capital that they're able to raise now and what they can do with that. So I don't want to own the shares. This is an example of a company that I'm actually trading because I don't want to own the shares. But what I'll do is I'll do a bull put position where on the down day, I might sell off one of the legs and lock in that put that I bought. When it's down, I'm going to make a whole bunch of money. I'll lock that in. And then typically I'm just riding for the next bit of volatility and then cashing out, right? So that's where you can sometimes play around and make a little bit of money. You got to be careful, obviously, doing that kind of stuff. But there are opportunities where I've been able to do that just with a tiny percentage of my portfolio, just kind of playing around. But yeah, I mean, on positions that I actually want to hold, when I'll do a bull put, which means I'm long-term bullish, I'll buy and sell a put. So I've got my downside kind of protected. But what I'll do is on the down days, I'll sell that put that I bought for a nice profit. And on the up days, often I'll roll the puts that I have to further out dates. I eventually want to own the shares, but I keep getting closer and closer to the money. I'll start way far to the money and I'll slowly roll my profit until I get close to the money. Eventually I get the shares. But I got the shares at a huge discount because every time I rolled, I made a profit, right? I locked in that gain while minimizing my my losses. So that's kind of been the strategy I've been employing. And then and applying to my overall portfolio, where if like the other day last Friday I got assigned TELUS shares. And I think my cost base right now is like 25.60 or something, 25.50 a share, and that's about what it's trading at. So I haven't lost any money. It says I've lost money, but that's because it isn't factoring in the payout I got on the put contract that I sold. So had I just bought TELUS, I'd actually be down about 5% right now, but I'm actually at break even and I'm about to get a dividend payout as well. So that's something that that's great about using puts to acquire positions you want. So if you decide, hey, today I'd love to acquire this company, buy a put that's kind of close to the money if you feel like you want to own those shares, and you get a discount just for, and maybe if the company pops off and does really well, you just roll that put to a further position and collect that profit, lock it in, and keep trying to acquire those shares if you still believe in them at the new valuation, right? So that's where it kind of, and then if you get assigned the shares, one thing I did as well, once I got those tele shares that I wanted to have, I started selling calls on them a couple months out. And selling those calls has been free premiums. It wasn't much. Like, I think I'm getting like $50 every time, every couple months I go in and I sell a call on it. But that's an extra 50, $100 on a few $1,000 position in TELUS as an example. And I've actually got some more puts out to acquire some more shares because the contract that I got, one of them expired and I made money, and the other one I got assigned just because the timing of where it was, and I bought pretty close to the money with that one. So yeah, I mean, I'm slowly trying to build a portfolio. That's my overall intent. And so I use options to juice up the returns on those positions I want to hold anyway. So a lot of people are trading garbage. And when you trade garbage, the worst case scenario is you end up with those shares. If you're, well, I mean, it depends what you're doing. If you're, buying call options, the worst case you lose the premiums. If you're, buying puts, the worst case you lose the premiums again. So it depends on what you're doing, I guess. I'm going out with a position that it's a long-term outlook and a long-term focus for me. And I think that one of the other great things about options trading as opposed to a holding strategy is I would rather cycle through companies that I like and readjust my portfolio actively. One, because I enjoy it. It gives me something to do during the day. I actually like it feels like going into a casino for me almost, but I'm not gambling. It's not even like a casino. It's the wrong example because when I go into a casino, I feel terrible. There's always these old people that like are smokers, and it's just nasty, and they pump too much oxygen. It feels weird to be in a casino, but it's like going on realtor.ca for me. Like I used to go on realtor.ca every morning, look at the properties. Now I go on my Interactive Brokers app and I look at and I go on my, Yahoo Finance and my Apple Finance, and I look at all the positions. I look for the sales. Like, hey, what's on sale today? Oh, this company's on my watch list. I love them. They're on sale 15% off today. They're trading 15%. And what I've noticed is, let's say something happens and the stock's 5% less valuable. The market will overreact to that, especially now with all the DIY traders. And instead of going 5% down like it should, it'll go down 20%. And the next day it'll overcorrect 10%. Like there's just these overcorrections under and over. And the volatility is crazy right now is what I'm kind of seeing. And that's been a trend that's been increasing over time as we see more people with YOLO type stimmy checks that they're throwing into their Robinhood accounts, right? And so we're seeing a lot of that going on right now. And I think that the larger institutions are even feeding into it more, and they're sort of riding those troughs and those riding the dips, and they're riding the tops of the peaks as well, right? And pumping things. It's just human psychology. So I don't know. There's definitely money to be made in just the volatility on the stuff that you want to own anyway, right? So definitely, yeah. What's up, Mike? Hey, how you doing? Mike says, how do you pick your stocks? Did you use a newsletter like Lee Owl? I actually haven't checked out Lee's newsletter yet. I'll have to look into that. I hear it's pretty decent. It comes with the Stock Hacker course. So I got to get into looking into that newsletter and see what's up. No, the way that I kind of, I have a watch list of a couple hundred stocks that I like, and I just pick companies that I think are long-term solid. And if I see that they're at a discount, or I see they've been beat up recently, I look to see why. And if it's nothing that is scary to me, like there's no real reason for them to be down, I'm like, okay, this is a buy. Or I'll compare them, use the comparable approach and say, hey, this competitor to this stock is trading way up here and they're down here, and I think they have a better product, and long term they're gonna be better off, so I might buy this trade, right? And so I'm holding for the long term. Do I do a ton of technical analysis? No, not really. I might look and see where things are trending, kind of watch and see. I'm not a technical trader. I honestly don't believe in technical trading. It requires you to understand human psychology, and it requires you to sort of try to forecast or predict the future, and none of us can do that in the short term. There's actually no one who can do it consistently short term. There are no fortune tellers. Like you literally can't predict what's going to happen. If you could, then we have people that billionaires that are consistently replicating this strategy, but they don't. We have people that get lucky one-offs, right? What we know is in the long term, if you're buying companies with solid fundamentals, with great ideas, great products, and you believe in their ability to execute and management's ability to execute, then you will realize great profits over a long period of time. So I like to invest in businesses that I think will be here 10, 20, 30 years from now, or I invest in a business that has solid cash flow right now, and they're handing out chunks of that, and they have a monopoly over what they're doing. As an example, like I was watching a documentary last night on Blockbuster, and like Blockbuster is an amazing story, really. They a lot of people think that Netflix killed Blockbuster, but actually, for a long time up until like 2009, Blockbuster was winning, and then the recession, they were full of a bunch of debt from Viacom, and that basically crushed their ability to invest heavily and act nimbly in their online video. Like Blockbuster had an online platform that was better than Netflix. They had a mail delivery platform as well that was with a bigger list than Netflix. In 2009, they were both online, both delivering content online. Blockbuster pivoted and was like, Netflix is doing this right. We should do it too. And then 2008, 2009 happened. You know, there was a crisis, financially speaking, and bad management decisions and lack of liquidity and too much debt that Netflix didn't have allowed Netflix to gobble up all of Blockbuster's market share. And Blockbuster, they sucked. If they were smart, they would have closed more stores earlier and pivoted online. And if they could have raised capital, which was hard to do in 2009, obviously. Yeah, just again, a bunch of bad decisions. They levered up, too much debt, and didn't have the foresight to realize that they needed to focus on growth as opposed to trying to milk the business for cash flow. So some bad decisions on their part. But my point being, when you're investing in companies that you believe in long term, and you have a little bit in all of these great names, I think that, and you pivot, by the way, if you're in Blockbuster back in 2009 and you see that they're not investing heavily in the online space, you watch their subscriber numbers fall, you get out of the position and you say, hey, Netflix is doing a better job. I'm gonna sell my Blockbuster shares and get into Netflix, right? So that's an example of, I don't know what the point I was trying to make there, but I think that long-term investing in the growth, in the new tech, as well as the cash cows, if you're invested in a number of companies, you're diversified, there's a level of safety there, right? That was the point I was trying to make. Was not having all your eggs in one basket, right? So yeah, that was the point I was trying to make there. So I guess, did I answer this question? How do you pick your stocks? So for me, again, I'm looking at stuff. I got a huge list of companies that I like, that I believe in long term. As an example, McDonald's is one of those companies that I like. Enbridge is one of those companies that I like. There's just lots of good companies out there that I think are fantastic and have a good, strong hold in the market. And on those days where they're on sale, I buy. And on those days where they're up, I don't buy. Hey Mike, thanks for being here every week. Your knowledge has inspired me to retire early. Kids' college life. That's awesome. Congratulations. Welcome to the early retirement club, so to speak. I think that one thing that has been sort of life-changing for me is not having to serve anyone. And that's been a big one throughout. People say, what's the difference between you and another realtor or some other entrepreneur that's chasing businesses and whatever? And I'm like, the difference is I can walk away at any time. So if I have a client that's not treating me well as a realtor, I just be like, okay, you're fired. I'm done. Or if I have a JV partner that's like, whatever, and we go into conflict and these things happen or whatever. And it's like, okay, we can just sever that relationship. Not a problem. Part as friends, I'll buy you out, you buy me out, let's sell it. No problem. I'm not actively my whole existence is never tied to one thing. Like, I'm not just tied to the stock market. I'm not just tied to real estate. I'm not just tied to the little crypto thing I got going on, or my businesses or my realtor stuff. I got so many irons in the fire, and that's the beautiful thing of financial independence is you don't have a boss. Even your clients, you don't care. Like, I get some nasty messages from people sometimes on Instagram where people will be like, oh my God, like they'll send me a long novel about their life story. And I love to read those, by the way. Some of those are fantastic. And sometimes I read them and I might be like, that's awesome. Or I'll give them like one tidbit of advice because, again, I can't respond to everyone, and I just don't have the interest in writing novels back to people. But I love a lot of the comments, and sometimes I'll respond with a 2-word, something like, refinance your house, or like you're saying, maybe sell, makes sense, stuff like that. And I'll get the meanest responses back, like, I can't believe you wouldn't, give me a great response. You're not this great online guy. I hate you, and like just these mean things. And I'm just like, I don't care. Like, that doesn't bother, like I just ignore that entirely. When people, push back and are like, hey, would you do a coaching call? And I'm just like, no, I'm not interested. And then sometimes people lose it on you. Like, what? You're not gonna do a coaching call? I'll give you $300 right now. And I'm like, I don't need the money. Like, no, I don't feel like doing a coaching call. I'm booking out 4 months from now, whatever. Like, that's one of the best parts about FIRE is that YOLO mentality. Like, I only live once. And so every minute I have is precious. And I cherish every minute I get to spend with friends and family. And oftentimes I will do, the odd, call with an investor or whatever, right? I might do those. But when I'm interested, when I'm not interested, like people expect that there's like, hey, you did this for one person, you have to do this for me or whatever. And that's the thing I love most about FIRE is that I don't have to do anything. I really don't like being told to do something. It's just, people who know me know that I like to come to things, I love taking advice in, by the way. If I'm doing something wrong, I like to hear about it. And I often will pivot in my strategy. But I do not like being told what to do. I did not survive well in the corporate world. I did thrive because I bit my tongue and I wore knee pads every day, right? I'm kidding. But, I did it for a time, but it felt like it was eating into my soul. And I hated not being able to express myself freely and what I thought. And the worst is when you express yourself and no one cares. Like, that's great, and then management does nothing. That kind of stuff sucks. So I like that my ideal state that I'm moving towards is I wake up in the morning, I do a little trading on my phone, I spend time with my family, I hang out, we go for a walk, we enjoy, all there is in life. And then maybe I do a little bit of business calls in the afternoon if I feel like it. If I don't, I push the meetings I have off. If I have a meeting at 1 o'clock, I might send them an email and say, hey, let's move this to Friday or Monday. And if like a deal dies over that, who cares? Like, it doesn't matter. I don't need the next real estate deal. I don't need that business that I'm investing in. Like, it's great and I have fun building those things when I have an interest in it. But sometimes I don't have an interest, right? And some days I wake up and I don't want to do that. One thing I really need to incorporate though into my FIRE life is I'm realizing that this is a challenge I didn't think I would come into, but at a certain net worth point, like as you get richer and richer, you actually need a staff member just to help you manage what you have. So I'm looking for someone, if anyone knows, actually, this is at 22 minutes and 22 seconds. Someone put it in the comments so when people are clicking on the video, they can find this after. If anyone knows a assistant or an executive assistant or someone who has bookkeeping experience, ideally bookkeeping is someone who can do bookkeeping, can do all the rest of my activities as well, because a lot of it's online, a lot of you could do. Ideally, this person's in London though, because I want them to come to my house if I need them there to like look over receipts or something. I don't want to have to digitize all my receipts. That's a pain in the ass. But I need someone to track all my trades, keep track of all my trades for my company. I need someone to, do a whole bunch of bookkeeping, maybe sometimes collect rents from a property, dispatch random things in my life. Like I need an assistant to just do all of that stuff. So if you know anyone who wants that like semi-retired lifestyle, two people I actually need. One person I could use right now is a semi-retired contractor who just wouldn't mind doing like odd maintenance requests here or there for like $35 an hour. Can be cash, whatever, to just take care of some stuff in my portfolio so I don't have to ever go to my properties, and they can take pictures and they can take care of it. So my assistant could coordinate with them. And the other thing I need is an assistant to help me with my bookkeeping. Just, when I spend money, I don't even want to pay people. I want to make an account, add my bookkeeper to this account. I will move money to this account once a week. They will pay transfers to my, contractors. They will manage the collection of rents. I didn't want to deal with that. Like even just the trading I'm doing, I realized that I have to track the exchange rate each and every day on trades I'm making in the US as an example. And like I've done, I think I did 1,000 trades in the last month, maybe a bit less than that, maybe 800 trades. I've done a lot of trades and I'm like, I have to record all of these trades for tax time, right? And that's a huge endeavor, right? So there's just so many little things. And like I have, random, sometimes a unit will come up for rent. I need someone to, place an ad for me or whatever. Let's say I'm trying to buy some graphics cards for my crypto mining operation. I might get someone to go out and look for those, right? On Facebook and Kijiji or whatever. I just need an assistant. I need someone that's a right-hand person to just help me with all the things I don't want to do, because just the bookkeeping alone on my portfolio is huge. I have so many little things that I'm doing and it's just, I don't want to do it anymore. Like tonight I have to sit down, I have to do my taxes again. Like I have Excel's already started where I've kind of input a lot of the stuff, but going back and just all that entry is just terrible. And it'd be nice if I didn't have to log into my banking app at all. Like if I had to pay someone for renovation, that my assistant, like just talk to my assistant, they'll get you paid, I'll prove it. approved, send them $500, whatever. You know what I mean? Like that would just be so nice. And I figure my stock options portfolio alone, just taking a small percentage of that profit, could pay a full-time salary for someone to do that. So if anyone knows someone who wants that position here in London, Ontario, longer term, and they just want to learn and whatever, it definitely has to be a long-term position. I don't want someone for 6 months or a year. I don't want to train someone and then lose them, right? I want someone who's going to be here for the long term. It doesn't pay that well, but yeah, it's something that I would love. I already have a CPA. Thank you for the comment there. What I need is a bookkeeper, to be honest, and actually a personal assistant to do all of those tasks. Someone for like 15, 20 bucks an hour, you know, who's just happy to just work and, you know, an easy kind of role that's super flexible, kind of do what you want. Yeah, that would be someone in London, Ontario wants to do that. That'd be cool. Hey Mike, long-term viewer here. I just closed on my second property due to inflation. I've used a lot of leverage. I used a line of credit for my down payment. My $50,000 line of credit has a balance of 45. Any advice on how to proceed? Because of inflation, you used a lot of leverage. That actually makes sense. So the argument would be that you'd want to use as much of the bank's money as you could, because in the event of inflation and the government doesn't step in, then, and I think that they probably won't step in soon enough, and what we'll see is that there'll be a bit of inflation and the debt you're paying back to the bank, your real estate asset is appreciating and theirs is like an interest, I guess. So if the government reacts, then interest rates would rise, so then they would make money that way. But in theory, borrowing a lot of money is a great idea if you can invest it smartly. So if you invested in the right pieces of land or the right equity positions, then yeah, I mean, it's getting a lot of debt is good if you can manage the risk and you can carry all of the debt obligations. So that's an important piece. What I recommend being ready if you're borrowing for, you know, equities, being ready for a margin call. In the real estate world, just having sufficient cash flow. If the mortgage interest portion of your mortgage payment doubled, could you sustain that? That's the question you have to ask yourself. And if not, then work towards a situation where you can pay that down to a level that you can handle to service it, instead of servicing all that debt. So yeah, I think that definitely levering up right now is a great idea. I think that if you're buying the right assets under market value, it can be a great opportunity. I don't know where the real estate market's going. I'm cashing in on some of my stuff to the point where I'm leaving just my profits in real estate to let ride and taking a lot of my money out. So if the real estate market does, you know, have a bit of a pullback, I'm ready with gunpowder to jump in. I'm not heavily buying like I was in 2017, 2018, even 2019, a little bit in 2020. There were some opportunities. Less and less opportunities, and I don't want to jump into something that doesn't cash flow for me, whether that's, you know, in the real estate world anyway. I don't want to jump into stuff that doesn't cash flow. In the equities world, I will buy stocks that I believe in long term, that have great visions and great long-term growth prospects. I will hold something like that long term in my portfolio. It's not the majority of my portfolio, but I do believe in those types of companies, and I do think it makes sense. Coinbase IPO killed the market today. That's probably true. I think Coinbase did, I probably will acquire some Coinbase on the next big dip. I think that it's a fantastic platform, and I use Coinbase. I mean, I think crypto is here to stay. I think that people are investing in cryptocurrencies for different use cases beyond just storing a value against inflation. I think there are definitely opportunities for revenue growth, profit. Yeah, just long term, I feel really good about it. I think that it's just the tip of the iceberg. I talk to so many people who don't even understand crypto yet. And there's so much wealth that doesn't even understand the use cases, right? So I think there is a bit of growth there. That said, again, it's fugazi, right? It's like art, like fine art, or you know, like anything else that you can't, that it doesn't have any real utility value, right? There's a little bit of utility value, but a lot of the price is in the potential future value, I think. So I don't know. I don't know where it goes. My whole portfolio is not in crypto for sure, but I'm dabbling, having a little bit of fun. I think there's some cool projects that I wouldn't mind investing in just in case they go to the moon. And I think a small percentage of your wealth should be outside of fiat. Makes sense. You know, I've often said that, either in gold, silver, you know, hard land. Crypto is now one of those asset classes like Bitcoin, Ethereum, et cetera, and so forth. So I don't know. I believe in the belief of others. And I think that there are use cases where it makes sense. So I don't know long term. The next dip will be interesting. Then we're on a bull market right now in the crypto space. It'll be interesting to see the next dip. I think I'll acquire a bunch in the next dip. Hi, how do you promote a YouTube channel? It's a great question. I'm actually not so sure. I've not done a really good job of promoting a YouTube channel. I've been making videos for 3 years now, and I only do my live show now for the most part. Can't think of the last video I made. It's been over a year since I made a recorded video. I used to have a partner that would help me. I had an editor who would help me with the editing, and we did a lot of filming together. Now I've got a camera sitting below me in a box that I haven't even used in a year, more than a year. So it's definitely something that I might get back into. I think there's value there. I felt like a lot of what I had to say, I could say on the show, and there wasn't a need to make a clickbaity kind of video or jazz up and make more entertaining the original content that I was going to say anyway on my show. So I just wasn't getting a lot of value from it, but there's definitely value in creating a huge YouTube channel. Meet Kevin's a savage. That guy is like, he's the GOAT when it comes to content creation. I think he's live like 5 times a day. I watch some of his content, but I can't even watch all the content that he produces. Like, I don't even know how he produces so much. It's wild. But yeah, I mean, yeah, it's just wild. I don't promote my YouTube channel at all. It's all organic, 100%. I've never paid for promotion ever on my YouTube channel. So it's just been purely from creating videos and people find them and share them. And that's a good way. If you want to grow your YouTube channel, sometimes collaboration videos are a good way to do that. I did a couple of some collaboration videos with Matt McKeever and Graham Stephan, and I did sort of one with Kevin and a few other YouTubers along the way, but that was all in the beginning. Now I haven't really been doing that at all. So people find out about me because you guys still watch my show and you share it. Or I'm on Instagram and I share something and someone shares it and says, hey, have you heard of this guy from London, Ontario, born in Sarnia, this guy Mike Rosehart, check him out. He's this real estate investor. He's pretty big fish, top 100 real estate investors in Canada, probably on the influencer space. I'm probably in the top 100 on social media. Yeah, probably. So that's something, for a time there, I don't know if I still am, but for a time there, I was in the top 50. I went through and found every single real estate investor who was sharing their stuff, and I based it on number of followers, number of video views, and size of real estate portfolio, and those things together. And so for someone that was sharing at the time, my real estate portfolio has been bigger than Matt McKeever's for some time. I don't know if he's probably past me now. I know he has 1/4 in that large corp. But for a time there was, I had like 70 properties with $20 million portfolio, and there weren't other people like me with a portfolio of my size that were pumping out videos a couple times a week, right? There was just no one else doing that in Canada. And so I was sort of a unicorn of someone who was practicing what I was preaching online with a degree of success, and there wasn't a lot of people sharing. So that's one of the success factors I think that my YouTube channel sort of enjoyed, helped catapult me to a little bit of success. These days, my subscriber, if you look at my subscriber count, it's like flat, and my views are actually like trending downward because I don't create enough content. YouTube only rewards people who create a lot of content. So I just have a loyal base that watches the show. We get 1,000 people or so, and a couple thousand people on Instagram watch my stories. And I appreciate all the people that watch. I've not turned this into a proper business, and that's on me for sure. The way that you grow a YouTube channel is you treat it like a business. You invest in it, and you put the time and the money into it, and you do pay for the ads and the better content and all that crap. Maybe I'll do that when I have more time. It's just not been something I wanted to pursue right now, and it's an option. It's something I might chase if I get the passion for it again. It just happened right now with 3 kids, 5 and under, and a dog, and everything else, and the mentees that I have in my life, and all the people that I'm helping right now. It's just, I have a lot of fishing rods, a lot of lines in the water right now, and it's hard to watch them all, and let alone add another one to the mix, right? So yeah, I wish I could give you good advice on how to grow your YouTube channel. I think the 3 things are for like having really good success on YouTube are 1, consistency. Like whatever, this is true for anything you do. Like you've got to be consistent at whatever it is that you do. So if you say you're going to commit to 2 videos a week, do 2 videos a week at the same time, all the time. Stay with it. Don't give up. The other thing is work hard. Like you got to put the time in. If you don't put the time in, you're not going to grow the channel. And the third thing is, and I truly believe this because a lot of people are getting on there and sharing on social media that have 1 or 2 properties, and that's cool. Like go ahead and do that. But you've got to be a SME is what I call it, a subject matter expert. You've got to be an expert at that thing that you do, that you're going to talk about on YouTube. Like if you're going to talk about cars, you better be the best guy when it comes to cars. You talk about real estate, you better know all there is about real estate. You talk about stocks, and that's why I don't talk about enough about stocks on this channel, because I don't spend 7-8 hours a day reading financial statements like maybe I did 10 years ago. Like I don't apply enough knowledge on, I don't have enough knowledge on a lot of these companies to actually do a video. I have enough that I honestly trust in some, I have like 5-10 analysts that I follow. I look at analyst ratings, I look at what other people are talking about in the space, I look at the company and their products, and that's how I make a decision. I make a macro decision. I might look at their financials briefly, but I don't have the time, like an analyst would, to dive in, and nor do I want to. Like, nor do I want to cover these stocks, because the amount of time to spend researching, you know, I'm retired here. I'm trying to spend a couple hours a day just, you know, enjoying the journey. And, you know, part of that, like if I spent 8 hours a day just on the stock market, that would not be me enjoying my journey. And if that means that my annual return is 20% instead of 100%, I'm fine with that. You know, if it means it's 15% instead of 40%, okay. If it's less than 15%, I mean, I've failed at life, right? What am I doing? 15% is like my minimum threshold. I don't even want to touch an investment if I can't get a guaranteed 15%. That's in real estate, stock market, options trading, lending, whatever I'm doing. That's what I'm looking at for it to be worth my time. So yeah, that's me. Hopefully that helps you a little bit. Next question was, Mike, do you invest into US dividends as well, or just Canadian stocks? Yeah, I do have some US companies that I like. The dividends are not treated as tax preferred. So there's not, you know, I'd rather trade those positions. Like right before next dividend date, I might sell the position and collect a gain as opposed to collecting the dividend, and then get back into the position. If I like the company, get back into them again. And that way I'm getting a capital gain, or even better, I'm getting active trading income because I'm trading the stock back and forth as opposed to holding it and collecting a dividend. So there's a way to enjoy the dividends by basically selling just for the next dividend date and then buying back again when it drops after they've paid the distribution or whatever. So that's something that I think that is a way from a tax perspective to own some US companies and positions. You definitely need to have some US in your portfolio. Canada isn't enough. We're like 4% of the world's wealth. So you're missing out on 96% of the other opportunities if you don't invest in foreign equities. Colton says, hey Mike, congrats on the purchase of your new home. Thanks, Colton. It is the single most thing, you know, other than my kids that are awesome and, you know, the life that we have built right now, it is the single thing I'm most excited about is my new property, my new estate. It's a beautiful, right in West 5, is a newest developed area of London. It's on the west, it's in West London, and it's a fantastic opportunity where they're dumping, I think about $1 billion in total into the latest and greatest state-of-the-art condo facilities. They're called the net zero projects. They're like townhouses beside each other, but the roofs are all solar panels. The windows are all solar. They have, correct me if I'm wrong on this project if anyone's following, but they have Teslas in the condo corp fleet that can drive self-driving to your door and pick you up as part of the condo fee. They have a robot that picks your garbage up and drops it at the curb and brings it back. You're recycling, your mail gets delivered by the robot. State-of-the-art net zero, so it's all generating its own hydro, etc. for the system. It's all like net zero basically. It's really cool. Tons of sweet, awesome boutiques coming, and I can walk from my house to all of these things. And I'm like literally a 30-second walk to all the newest boutiques. They're gonna open a grocery store, whole bunch of cool stuff going in there. I got in, I feel like just before all this development's about to happen. And so I think my land's gonna double in value. But moreover, like beyond it being a great investment, I think, a place to park my money, and it's how I justified buying this giant house, which I think will be worth about $2.5 to $3 million when I'm done. I'm buying it for 1.3, but fantastic, I don't know, over an acre of land. It's got currently a 5-car garage with a carriage house. It's 6,500 square feet. It has the nanny suite, everything done up to the nines. I'm gonna put a big pool in with the pool house. I'm gonna add a garage addition and make it an 8-car garage connecting around the back. It's got the circular driveway, so multiple driveways to get into it. Just beautiful backing onto, you know, green space. I have one neighbor on one side, that's it. So it's just my whole back. It's just a beautiful waterfall retaining wall that backs onto this beautiful field and trees. Just a forever home, like a beautiful upgrade. And I'm hoping to sell my current house for almost the price of the new one. So it's almost a trade, tax-free trade, which is insane. The market is so hot that the timing of just locking up this first one to when I eventually sell my next one in the 6-month closing that I've lined up, with the way the market's moving, I might be able to just trade houses, which is to me bewildering, just mind-boggling. Super excited. This house is a huge upgrade for my family. My girls are going to love it. My wife is so excited. The Godfather, Jonas, is coming with us, super excited. My other mentee coming with us as well, super, super excited. And there's just, even my dog, I think, is excited for this opportunity. It has so much raw potential, so much I can do to this property that I'm up at night just thinking about ways I can make it my own, ways I can expand it. We're gonna put these beautiful gates with cameras, so that the only way to get in is through electric gates that open into the estate. So I want to be able to have, like, no one, even a pizza guy has to buzz in to get onto my estate. So many cool things I can do, and for the price point, to trade my current house for that, I think long term will be one of the best financial decisions I've ever made, and lifestyle decisions the best I've ever made. Of course, there are some downsides. Like, you guys are probably wondering, what is it going to cost to maintain this place? It's got a geothermal heating and cooling system, which means it pumps fluid 100 feet into the ground, and it cools that for the AC. So there's no gas to my furnace. It runs entirely on a cooled system. I think the AC is like 200% more efficient than a standard air conditioning unit. So that was a super efficient, solid brick. I feel like, it's just a place that we're on our own well. We're on our own septic system, though we have services at the street. So if I ever wanted to connect on, I could, but I prefer not to. I'm gonna run a solar system on the roof. So I could be, my own water, my own septic system, my own sewer, my own hydro, and in theory, I could even bring my own gas through a tank, right? If I wanted to. It's right now on city gas, but I like having that flexibility and having the land to, grow a little bit of my own food while still being in the city. Like, my daughters can walk to school. We're in all the boutique shops, close walking distance. There are literally $1 million houses. They're like small 4-bedroom houses for $1 million that are like right across the street from us. It's just a fantastic opportunity. I feel like I am blessed to have acquired this property, and just super, super excited for it. So you'll see a lot of my Instagram stories. If you follow me at Mike Rosehart, I'm sharing a lot about that because that's what I'm excited about. And if you can contribute in any way to that, or want to help, doing renovations with me or something, I'd be open to that. If someone wants to come and trade, pick my brain while we're, working on some sort of project on the property, that's something that I'm super excited about. And I've always wanted my own Rosehart compound. And part of that is having people to enjoy it with me, right? It's not just about, what am I doing in a big house, right? My house is gonna be full of people all the time. That's my thing, right? Like, people who know me know I have a big circle that I keep around me. So it's, for my circle, for all the people you all know who you are, you're watching, there's like 20 of you people who are super, super close in my inner circle. This place is for you guys too, right? We've made it, and let's all enjoy it together. And yeah, super excited about that, to be honest. It's the biggest lifestyle upgrade I've ever made, and you're probably wondering the cost. It's, again, not much. Property taxes are pretty high, I'll admit. They're lower than they should be. I think they should be probably a lot higher. But yeah, the property tax bill, it's a lot. It's like, I have to double check, but I think $9,000 a year for the property taxes. So the property taxes are a little bit high, but for what I'm getting, like, most of the estates in the area are like 15, 16, 18,000 a year property taxes for something similar. So to be paying like 8,600, I think it is. I'll double check, but I'll make a video probably on it, or maybe I won't. We'll see. Maybe I'll share it on the stream. But it's definitely something that I'm super excited about. And yeah, next question. Let's see. What I will give you $300 right now, Vegan says. Someone wants a super chat. Like, if you're serious about that, don't super chat it, e-transfer it, because YouTube takes 40%. $300, that goes pretty far. There's a lot of, one way to get a hold of me, and one of my favorite ways to do a coaching call, is to come to me in London, Ontario, pick me up, because people know that I hate traffic. One of the things, when I quit my job, I was like, I'm never getting stuck in rush hour again. So I seldom, I do drive. Like, I drive my kids around if they have to get somewhere or whatever. I pick my daughter up from school. I drop her off at school as well in the morning and at the end of the day. But we order our groceries to our house because I hate traffic. I hate driving. So the one way you want to get a hold of me, you want to pick my brain, you want to do a coaching call, come to London, Ontario, pay for a coaching call, and let's go out for sushi. Let's go out for lunch. Let's just enjoy the experience for a couple hours. We'll talk about business, talk about whatever you want to talk about. I will feel obliged. If you come pick me up and take me out for lunch, I will feel, pay for a coaching call. I'd be obliged to give as much value as I possibly could, probably even some follow-up. So that's the way to get a hold of me if you want to do it. Don't just send me a message saying you want to do a coaching call, because I don't really have interest in that. Let's just go to lunch together. Let's, enjoy over a meal. Let's enjoy the experience. And for me, that's what it's about. I feel like when I go to lunch, it's not feeling like work, but if I'm on a coaching call in my office, it kind of starts feeling like work. So I tend to turn down coaching calls for the most part. Okay, let's go up here and find the next question. Are you buying Coinbase today? No, I didn't buy any Coinbase today, but I do have it on my list. When the next big red day, next big drop day, I'll probably pick up some Coinbase. I think long term, it's going to do very, very well. I believe in the company. Do you think crypto is a safe hedge against inflation, or do you stick to precious metals? I think that crypto, I don't know, because when we watched the world collapse, or I'll go on the brink of collapse during the crisis last year, crypto fell with the S&P 500. Like, it did not fare well. So I don't know. I think in a real world crisis, when we're like, the world might end kind of thing, when that's what investors get in their mind, they go crazy, right? Everyone's like, we're all gonna die from COVID. It didn't happen. We didn't all die. It was just like the common flu, like a more severe flu, right? But it wasn't even like a flu. It was more like a cold, a more severe cold. But by the way, if you've had someone that was affected negatively by COVID, I'm sorry. I haven't personally. I know lots of people who got COVID. My property managers got it. A lot of my tenants got it. A lot of people in my circle all got it and recovered fully, no issues. So my personal testimony of like 40 or 50 people that I've met that have got it all said it was the common cold. I think it's possible I might have even had it. I don't even know. I wasn't really affected by it, but I did come in contact with people who had it. So yeah, I didn't have any symptoms or anything, so I don't know. But if you have had it, I'm sorry. I'm not trying to throw shade or anything. It's obviously, it's a cold. It's a serious cold. If you're old or you're sick or you're at risk, being obese is one of the big at-risk factors we found now. So if you're one of those people in North America, which is like half of North Americans or something, right? You might be at a bit more elevated risk, but take a bunch of zinc, take a lot of vitamin C. There's lots of things, like have some sambucol going, and I think you'll weather better than a lot of what the medical community is offering. So anyway, but my point being, during that time that the world was collapsing, crypto was not necessarily a very good hedge. The reason being, if networks kind of go down and the world goes to the olden days, right? What are you gonna do with some crypto algorithm when there's no one to process your transactions, right? So I think that there is some safety in it, but at the same time, I prefer in a world-ending crisis, I prefer guns, food, water, hard commodities like copper. I'm big into copper and silver. I think it's smart to have a lot of the precious things that you would need that store well. Those are better. Like copper is actually a really great store of in all electrical components you need copper, right? I think people should buy copper coins. You can melt down, right? Or a copper pipe. If you have the place to store the copper coins, it can be, good as hedge as any, especially if you can, you don't have the money to buy gold bars because gold's pretty expensive. Will you eventually give up real estate investing, consider stocks and dividends are more passive? Dan, that's a fantastic question. I will eventually, is very likely, get to a point where, and I'm there now. No, I'm not there now. I'm at a stage now where I don't want to actively do anything. So if a tenant messages me, I will hand that off. I will not respond. Try to avoid that entirely. So I don't want to deal with tenants. I don't want to deal with contractors anymore. I will probably have someone, the key person, to take care of those duties I don't want to do anymore. Does that mean I won't still buy real estate? No, I love architecture. I love buildings. I love land. That gets me going. Like a fun day for me is going and looking at properties. Does that mean I still buy them? Probably. At these price levels, not as much. There's a lot less real estate that I'm interested in. There's maybe 1% of the deal flow that I'm actually interested in, right? So there's not a lot at these prices that make sense. But, look at Vancouver. 10 years ago, nothing made sense in Vancouver. And yet the prices still keeps going up. Right? I think it's possible, and someone posited this theory to me, like it's possible, Mike, that we end up like Europe, where the top 10% own 90% of all the real estate, and the other 90% are all just renters. And it is something that I've thought about. I'm like, it's possible here in Canada that part of that great reset discussion by 2030 that, there are a few that own most of the capital and most of the real estate, and everyone else is just a serf, just a renter, right? We're all just paying tax and rent, and hopefully I'll be on the side of the owners by then, right? Like I still have, 9 years to accumulate enough to be on the side of the owners, and I think that that's my current mission. So will I always be buying businesses and buying real estate? Yes, real estate will always be part of me, always be part of my journey. Do I want to be more passive? Yes, I am actively trying to reduce the amount of workload. I have made conscious decisions to pick passive investments over active ones, and I've turned down opportunities. I wholesaled a property actually this year that had 150,000 upside near Western. It was a duplex, and a friend of mine was watching on Instagram and reached out and was like, "Hey, I'll take that property offer for a 50K wholesale fee." And I was like, "Done." I signed the property to them. So there are opportunities where it makes sense to walk away from deals because of the work. Like, did I want to put in all that work to make an extra 100 grand? No, I'll just take the quick money and go. So there's a lot of opportunities where I'll still be involved in real estate, but I'm not going to get my hands dirty. Like, I will not take my drill out and get my hands dirty. In the same way, someone just messaged about being a gardener. I actually do love gardening. It was something I did as a kid. Landscaping is something that I love. I'm good at it. It's just not a good use of my time anymore. I can go do a coaching call, make $500 or $300 or whatever. I can focus on something else that makes a lot of money and pay someone full time for a week to garden for me. So that's a tough one for my brain right now that I've been kind of wrestling with, right? Is the idea that I could afford, like for me tonight, to sit down and go through my taxes and do bookkeeping. I could just hire someone to do that for 8 hours and in a half hour of my time earn enough to pay them to do all that work. So it doesn't make sense for me to do it myself. So that's something I need to learn to outsource. And so in my journey, I will continue to outsource. And that's a big piece of my plan, my long-term plan. Yes, I want to end up more passive. Yes, the goal is, right now, the goal would be, like, if you ask me how much do I need to walk away, if someone gave me $100 million right now and said you can never actively invest in anything again, you can only do passive investments, I'd do it. 100 million is probably where I would stop. Like 100 million is enough to guarantee my family generations from now is set. And we're never going to be, in a situation where and at 100 million, you have a bit of control too, right? Like if one of your family members gets caught by the police, you have to lean into the politicians or whatnot. There's a way that you can bend the world to your will. If you have a really bad neighbor, you can buy them out. You have a really bad situation with the contract, you buy them out. And so at 100 million, that's like problems go away level of wealth. And so I never thought it'd be possible, to be honest. If you talked to me 10 years ago when I started on this journey, I was, in university at Western, and I was studying, early retirement extreme and all that going. I think that, by the way, thank you so much. I see in the comments here, guys, let's get that live like button hitting. Let's get the live, shared around. I appreciate that. If you can share this on your Facebook, your Instagram, wherever, you're enjoying some of this content, and that helps. Thank you for sharing. It's the only way this channel grows is by you guys sharing. And if you're getting any value from this, thank you. Thank you for watching, and hopefully it's worth your time. It's worth my time. Let's see. So what was I saying? We got 61 people watching and 20 likes. So we got 40 people watching who haven't smashed that like button or haven't shared it. How many of you guys have shared this right now on some social media somewhere? Hey, this guy, Mike Rosehart, he's having a great chat right now. Come join. Come talk about real estate stocks. Bring your questions. Let's have a community discussion. You guys can have a chat in the chat if you want. And that's cool. That's what I'm here to facilitate, right? You guys, we're all like-minded people talking about business, stocks, real estate, whatever. That's what this community is. That's what the Mike Rosehart channel is designed to do. So most of the people watching right now are interested in that. So if you're looking for people who are like-minded, who have the same sorts of values, they're right here in this chat. They're in the comments on my videos. If you want to find those people and connect with them, this is the way to do it, right here. So share it around. Let's get the word out there, right? And maybe you can find that person that's your equal, that's your match, either on a friend level or on a business associate level, whatever. Yeah, cool. Let's go to the next question here. I gotta put my daughter to bed in about 5 minutes, so let's see what we can do in the next 5 minutes for questions. Man, you've been looking for an assistant for a year. This is true, actually. and I haven't actively been looking. I have had assistants. I had mentees who, and I have someone right now who I pay. I think it's like $20 an hour or something. Check that. But I do have someone that I pay now to do tasks for me. I do have 2 property managers. It's just I would be looking. I do want someone long term who makes sense to be part of this journey, right? And yeah, if I could find that right person, I'm always throwing it out there because you never know. You never know. Next question is, will you eventually give up real estate? I did that question already. Are you willing to pay someone because the time wasted on doing it yourself is losing you money? Part of it is that. Part of it is just I don't enjoy it, right? And I hate it so much that I would pay a premium to not have to do it. A good VA can be had for less. This is true. I could optimize a lot of it. I actually had a VA that was in Venezuela, and he was actually a CPA at KPMG, and I was paying him $3 an hour USD. That was the rate he was asking for through a site I found him. And he was great, actually. He was pretty good at going in Excel and adding things in. The problem was I needed someone to physically come here and deal with the receipts. And I needed someone to physically be here sometimes to see a property. It's hard for them to understand how to list it if they haven't gone and physically saw it. So I think there's more value. I could have an assistant that also had an assistant. Like if there's a person out there who wants to have a VA that they outsource some of the tasks to, cool. I'm fine with that. I just don't want to manage that. And I don't want to have to spend the time to record the videos on here's how you do this. Here's how you do this task. So it's the training involved with that, right? And I've had mentees in the mentorship program that have done that for me. The problem is the turnover. I want someone who's in this long term. I get someone who's a mentee and I train them and then they get a couple property deals or whatever and they realize they can make multiple 6 figures and they're like, I don't want to be an assistant anymore. So I need someone who just is cool with like being an assistant for a long period of time, who doesn't want to invest. Ideally, it's someone who, is going to be here for the long term, right? And that's hard to find, really it is, truthfully. Maybe I just need to pay better, I don't know. I don't know. A gated estate sounds really nice with how crazy the world is getting, Trevor says. It's a good point. What are your thoughts on pre-construction? Pre-construction can be good if you put a little bit of money down and a long closing and you can assign the contract before it closes or enjoy a bunch of appreciation on the deal before you end up having to actually close on it. That could be huge. I did a pre-construction new build, took them 11 months to build it, and by the time it was done, I had appreciated a little bit. The market wasn't as hot in London back when I did it in 2014, and it was built in 2015. So 2014 I signed it, 2015 it was, in 2014 and 2015 it was built. So I've done the new build stuff. It can definitely be worth it sometimes. They don't cash flow very well, but okay, yes, I need a haircut. I know. It's been like 6 months since I've had a haircut, and I cut my own hair with the help of my wife, especially the back of my hair. And it definitely has been like it's quite long right now. I could pull my hair down and see just how long it is. Like, you guys can see just how long my hair is getting. It's pretty crazy. Anyway, I gotta go pretty soon here, so I'll pick 2 more questions. 2 more. Do you underwrite options on risky equities since the premiums are so nice, or is it too risky? Yes, I do. I prefer to do if I'm going to do calls as an example, I prefer to buy puts. I'm going to buy a put and sell a put. So I'm doing what's called a bull put spread. That's one thing I like to do the most to limit my downside. Companies like Tesla, I wouldn't mind owning some shares in Tesla. I can see Tesla in 3 years from now at $1,000 a share very easily. They're monsters and they're growing very quickly. So I could see something with that. Do you think it would be wise to buy real estate in California when starting out? No, Rylan, I don't. Maybe your primary residence if you're gonna house hack it, maybe, but I am not bullish on California real estate at all. Overpriced, doesn't cash flow well. Could go to the moon, who knows, but I think the tax situation there, the business exodus, there's just so many people who have wealth that are exiting California for the tax reasons, for the business reasons. I don't think it's going to be a good place 20 years from now. I don't think there'll be the same development there. All the tech stuff is leaving, right? We're seeing an exodus from California. So I'm not bullish long term. I think it's going to be a surf nation of people, you know, on handouts. Do you think crypto is a safe hedge against inflation or stick to precious metals? I already answered that question. How would that appreciate your house or land? How would that appreciate? I don't know if the question is there. I don't understand it. Trevor, congrats. Thank you on the new house. Do you do stock trades? Just pick up puts on stocks you like and wait to get a sign and then hold the shares? Yeah, so sometimes I'll do spread trades. It depends. Most of what I'm doing, most of my strategy has been selling puts and acquiring the company and then selling covered calls on those positions that I own. Sometimes if they get called away, I might start selling puts again. I will buy puts on some of my portfolio as well to hedge against margin calls. So it just depends. I don't do a lot of buying like leap calls, though that isn't a bad idea to buy some leap calls on some of the heavier growth stuff rather than owning it. You can control those shares for a lot less. And if you're a long ways out, hopefully the IV isn't too expensive. And if you sell it off, then you're good to go. I gotta go. My wife wants me to go. She's literally banging on the wall being like, hey, time to go. Thank you guys so much for watching. I really appreciate all of you who have joined in tonight. Smith maneuver is a great thing. For those who asked. Have you participated in coaching seminars? No, I haven't, but I hear good things. I can't get through all these. I'm sorry. All right, everyone, thank you so much. Hey, sweetie, love you. Mwah. I gotta go. My daughter's here and it's time for her bedtime. So thank you all so much for watching, and I will see you all next week on the live show, 7 to 8 p.m. Eastern. You see on Instagram at Rosehart. See on my Facebook, you know, wherever we connect. Happy to connect with you guys. The secret to unlocking a wealth through you is 3 levers. Spend less, earn more, and maximize returns on the difference. Good night, everyone. See you next week. If I missed your comment and you want it here, you want me to respond to it here, copy it, save it, repaste it after the video is published for replay. And if you're watching the replay, thank you for watching. Good night, everyone.